Hi, welcome back. Today we're going to continue to look at Microstrategy Incorporated. So without further ado, let's take a look at the daily chart of Microstrategy. Now in my previous analysis, I mentioned that the stock was getting a bit parabolic and there is a danger of a correction or a crash. But at that time, I said also that we should follow the trend. And to do so, we need to look at multiple time frame analysis, whether it's looking at the daily chart or even the 60-minute chart. And also the 5-minute chart is very, very helpful because stocks that go up like this don't go up like this forever. There's bound to be some corrections. And as you can see, there was a green bar here and then a gap down and a red bar and then a gap down. And today at this moment, the market is still trading. Stock is making a doji-like pattern signaling indecisions from market participants. Now, when you look at the 200 MA and the 50 MA, when a stock is too far away from these two moving averages, chances are that it will snap back. Is the 50 MA and the 200 MA are like dog leashes. Price is like the dog, and when the price is too far away, you should expect at least correction, because prices don't go up straight line forever. Now, the stock right now is very near the rising 220 MA, and usually this gives a chance for you to buy a trade in the stock because the 20 MA can be support, you can buy it cheaper, but the question is whether you should go in or not. And for that we need to look at the 60-minute chart or at least the 2-hour chart. So let me just go to the 2-hour chart first. Now you can see that the 2-hour chart is not looking very good at the moment for Microstrategy. Why? Because the stock is below the 2-hour 20 MA. It's just a very simple trend following tool that I use. You can use many kinds of trend following tools that you want. When the stock is above the 2-hour 20 MA, look, it rises up very nicely despite correction. It continues to rise, but the moment it drops below the 2-hour 20 MA, I deem it to be not very conducive for short-term trend plays. Okay, this will come into areas of support and resistance which you need to look before you enter. Now let's go to a more practical one that I like to use is the 60-minute chart. Now here we have a bullish cross. You see when the 20 MA cross above the 50 MA, it ignited a massive rise. Okay, no big trends start without the 20 MA cross above 50 MA. I just call it the bullish cross. You can see here this nice rise happened after a bullish cross, and this nice rise happened after a bullish cross. And look, right now the stock make a bearish cross. Doesn't mean that it will crash back down to 700, but it just tells me that this is not very good for momentum plays on the long side. The other thing is it's below the 20 MA, below the 50 MA, which I don't really like. So all these breakouts and dips in the 60-minute chart, bullish momentum plays, might not very good at this moment. Okay, which is now we switch to defensive mode, which is looking at support and resistance areas. Now before that, let me just draw a simple trend line here. You want to connect the lows here. It is below a trend line, which also implies not very good from the long side. Okay, there's nothing wrong with stocks going up and down because it's just the nature of stocks. Even Microstrategy, a hot stock, doesn't go up forever. That is why the maxim, my friends, the maxim, the trend is your friend until it ends. You really have to not only know that but really put it into practice in your trading, in your technical analysis. And a simple trend following tool like the 20 MA and 50 MA in the 60-minute charts will go a long way to help you to understand when you should be heavy playing the stock and when you should be out of the stock. Right? Bearish cross below 50 MA, don't press the pedal at all. Well, don't press the pedal so hard. Now that we are in a defensive mode, let's go to and see the support areas. Okay, this was previously a support area. See how the stock went up, traded, corrected, but bounced back up because of support. Now it has broken below the support area, and we need to look at where is the next battle line. The next battle line is here. Support area is previous top and congestion areas, which is why when you see the gap down here, it did not boom all the way down, but it bounced back up because the support area kicks in. This is the battle area. And if this support area does not hold, right, the stock will most likely correct down to the 200 MA and possibly meet this next support area. Okay, usually when the stock is below the 20 MA, I don't want to look at it in the long side at all. The play is over. You want to wait for it to drop to a significant area of value like here. You want to wait for it to stabilize, but bearish momentum slow down, and then you take your time to enter. Okay, I'm speaking not about day trading, but overnight holdings, like holding for 3 days, 5 days, and so on. Okay, so that is the things that you need to consider, because you're not day trading, you're holding stocks overnight. So you need to be very precise. You need to be the trend on your side. Now, if you're day trading, it's a whole different story. Now, here we have the stock. You see, this stock, this is a 5-minute chart. The moment it drops below the 200 MA and have a bearish cross, it started a 5-minute downtrend. And this tells us that, you know, below 200, 200 is above the 50, 50 is above the faster 20 moving average. Oh, this is not a very good environment to buy stocks for a few days and hold for a few days. You can short it and hold for a few days. Yeah, because it's below 200 MA. Now, this stock, yes, 2 days ago, it gapped down, but it kind of traded here and went up and formed this consolidation here. And it broke back above the 20 MA. And for intraday trade, you can actually buy the stock as it breaks above the consolidation because it's gone back over the 20 MA, put the stop loss and ride it higher. Okay, these are some intraday plays. Here is like a 5-minute bullish flag. You can buy the breakout. Okay, buy breakout, put the stop loss, take the height of the flag, project it higher to get the target. And of course, where is the okay, today's market opened around, okay, this today it traded sideways, right? But at this moment it's just testing this support area. Okay, it's below the 200 MA, so not a very good to hold overnight, but of course you can do intraday trades. Now this is a spot area to watch because 2 times it was able to move back up and it's testing the support area. And if the support area does not hold, okay, it will just continue to sell off down. Okay, so watch this support area carefully. I know maybe by the time you watch this video, this has already happened, but that's the thing with commenting on day trading. You know, sometimes you can only review and recap it, not comment it as this happened, as compared to 60-minute chart and daily charts. Okay, so at this moment you have to be very, very careful. This is support area to watch. You need to see the stock stabilize first before entering again. At this moment, I don't see it stabilizing yet. Okay, maybe 1 or 2 days. You want to look at maybe a bottoming tail happens here, or bullish reversal candlestick happens around here. Then maybe you can buy. Okay, the dip. okay, and maybe ride it higher. We do not know at this moment. Okay, we just want to look for it to stabilize. Okay, that's the thing with trading and technical analysis. You only trade when there is a very solid setup, okay, in the daily chart or whatever time frame it is. Okay, maybe the nice run up is over, and when the nice run up is over, it really takes a lot of skill to be able to make money. Okay, because most of the time you're just sitting on your hands and waiting for the best setup to happen. So I hope that this simple analysis has helped you. Right? If you find it helpful, do please give my video a like and subscribe to my channel, and I'll see you in the next one.